Edward Brown, host of The Best of Investing, here to remind you to tune in this week on Saturday at 8 p.m. Our guest is going to be Saurabh Shah. You're not going to want to miss this show. That's The Best of Investing on Saturday at 8 p.m. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a five-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And today's trivia theme, since we are still in basketball season, getting the playoffs right now, is the NBA. Right? That's our trivia theme. Now, today we do have a special guest, Kris Morin. Let's see, he's from Three Peaks Capital. And we'll have to ask why that. And the title of this episode of the radio show is Unlocking the Power of Multifamily Real Estate Investments. I'm going to read a little bit about Kris before I introduce him here. So Kris is a former Fortune 200 strategy executive and Accenture consultant, embarked on a transformative, I'm having a little trouble reading here, transformative journey from corporate burnout to financial freedom. I like that. As the co-founder and head of investor relations at Three Peaks Capital, Kris now leverages his expertise to help professionals nationwide diversify their portfolios and secure robust financial futures. Driven by a desire for more than the relentless pursuit of corporate success, Kris recognized the limitations of traditional career paths and investment strategies. His personal journey led him to the realm of real estate, where he spent over a decade honing his skills alongside industry titans and building a multi-million-dollar portfolio of high-performing multi-family apartment complexes. Through Three Peaks Capital, Kris shares his wealth of knowledge, offering professionals an alternative way to a path to financial security. Hey, Kris, welcome to the Best of Investing.
It's good to be here. Thank you for having me.
Yeah. So share your personal journey from corporate strategy to executive corporate strategy to real estate investment expert. What inspired your transition?
You know me. I'm a millennial. I wanted to be CEO, right? I was just gunning for the top seat. Early on in I'll say this, roughly 14 years ago, around the time of the Great Recession, I was in my late 20s, but I was moving quickly through the ranks at some of the bigger consulting firms in the U.S. And I realized really quickly how much sacrifice it takes to achieve the kind of success that I think a lot of people aspire to. To become the SVP. So I was sacrificing time with friends, family, hobbies. I was on a plane, 48, 50 weeks out of the year, and I was burning out, and I couldn't imagine doing that for 30 plus more years, saving my way, into retirement. And about the same time, right, the Great Recession hit, and I watched, a lot of people had, half their net worth ripped out from underneath them. And, I was kind of combining the two reflections in my head: work harder for longer, but then potentially to have it ripped away from you, right? So I knew early on I had to think differently about how I invested, how I prepared for retirement. And I knew there had to be other ways to add additional income streams so that I could retire sooner if that were the goal. At the time, it felt like it was, but that was really kind of the impetus for all of this. And so I went off and started learning about real estate, and that's where the journey began.
So when did you actually get started in real estate then?
2009, right at the depth of the recession.
That's really, it's funny because real estate still continued to decline for another year and a half, 2 years, but then it started to go up. So actually, your timing is actually probably pretty good.
Yeah, well, I won't take credit. I won't say it was because I saw an opportunity. It was purely coincidence at the time. I said, I'm going to try this real estate thing. But yeah, it was a great time to do it.
Well, interesting. When I first got into the lending side of things, that was in the early 90s during the recession. And when the S&L debacle happened, that was creating a lot of opportunity for people. And so again, same sort of thing. I just happened to fall right into it at that time. And that was 30 years ago. Wow. Amazing. Let's see here. We've got just about another 30 seconds before we have to cut to break. When we come back, we're going to ask Kris some questions. What are the key advantages of investing in multifamily real estate compared to traditional stock investments? And how does Three Peaks, we'll have to ask him again, All right. Well, let's tell us now. Well, actually, when we come back from break, explain how you came to Three Peaks Capital. I want to know how that name came up. All right. Our first trivia question here. We're talking the NBA. What player led the NBA in blocks and rebounding exactly once in his career, and both happened in his rookie year? That's our trivia question. Call 888-912-1190. The first caller with the correct answer wins that tanning certificate, which, by the way, is worth over $100. What player led the NBA in blocks and rebounding exactly once in his career, and both happened in his rookie year? Again, 888-912-1190. First caller with the correct answer wins that tanning certificate. And by the way, let's see here. What was that? 2 weeks from now is the Diversified Mortgage Expo in Nashville, Tennessee. I will be there. You can come meet me. My voice will probably be a little bit better and get a little hoarse. Did a lot of talking this morning on meetings, Zoom meetings, and all that fun stuff. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Kris Morin. And Kris, we're going to ask you this trivia question. What player led the NBA in blocks and rebounding exactly once in his career, and both happened in his rookie year?
Can you give me a year?
I think it's I'm going to guess it's in either the late 1990s or early 2000s.
I have no idea, but I'm a UConn guy, so I'm just going to say Danielle Marshall.
No, it's Shaq.
Shaq. Was it Shaq?
Yeah.
So I
Shaq.
would have guessed Shaq, but I would have thought he would have won that many times in his career.
I know. Isn't that amazing? Yeah, he only, I guess at the same time you had, Dikembe and maybe Elijah was still around.
Yeah.
All right, so we have Kris Morin from Three Peaks. Now Three Peaks Capital. Where do the Three Peaks come from?
I don't have I wish I had a really creative answer for you. So I'll tell you this. You have multiple companies, and when we set up this new commercial entity, we had lots of names that we dreamt up with all kinds of creative, visuals to go with it, but they were all taken.
Yeah.
And myself and my two partners, there were three of us, just got really frustrated. We're in a meeting one day, and my partner said, "Oh, the heck with it. Let's just call it Three Peaks Capital." And lo and behold, the name was available. And so we said, "We'll take it." And it wasn't super creative or sexy, but at the end of the day, most people, um, you know, they kind of associate the brand with me. So I think a lot of people, if you were to say, "Hey, do you invest with Three Peaks Capital?" They might say, "I don't know. I'm not sure." But if you said, "Do you invest with Kris Morin?" They'd be like, "Oh yeah, I invest with Kris Morin." So
So,
it's
and
a funny business that we're in.
yeah, well, interesting. You're the investor relations guy there, and I'm the investor relation guy at Pacific Private Money, because
Okay.
we have a few different funds. One of them's our actually. Do you manage one of the funds? How many funds do you guys have?
So we only have one fund, and then
Only
we
one fund.
we just do traditional syndication on all of our acquisitions, unless we do like a
Got
joint venture or something. Yeah, yeah.
it. Okay. Yeah, we have a few different funds. I manage one of them, which is a Southwest fund that we buy discounted mortgages. It's pretty conservative.
Yeah.
So let's see here. Okay, so how does Three Peaks Capital help professionals diversify their investment portfolios and achieve financial freedom?
Yeah, so I'm going to approach this as if the listeners are all new, but if you think that they would benefit from going deeper, I'm happy to do that. So I think a lot of folks aren't super familiar with syndication, and so I always like to kind of explain it as, when you invest in the stock market, or you're buying stocks or index funds, you're buying essentially fractionalized ownership in a company or a whole
Yeah,
bunch of companies spread across geographies, sectors, right? And you're spreading the risk. When you're investing with us in commercial multifamily through a process referred to as syndication, you're basically buying fractionalized ownership of high performing apartment complexes. So it's the same thing that folks have always done. It's just a
yeah,
different asset. And the benefit there is they get to share in the profit and the loss, right? And so, they get income distributions quarterly from us. So we're collecting all the rents, right, at scale. We've got hundreds of tenants paying rents. We return some of that capital to them. They're also benefiting from the equity that we're gaining, both from the tenants paying down the mortgage, but also the additional appreciation that we're getting in the property through the improvements that we're driving. So, when you add all of those things together, right, the returns really start to compound in a way that you just typically aren't going to see in the stock market. And
Well, plus you're getting depreciation
that's right, and the
on the
depreciation
apartment.
benefits on
Yeah,
top of it. That's right.
on
Yeah.
that. So when you do your syndications, do you use leverage or you buy them all cash?
Great question. So we use leverage, but
Yeah.
we're at a point in time in our history, right, or at least in our market cycle, where cash can make more sense depending on the market and the size of the asset, and really, it's market dependent and deal dependent. But
Yeah.
we haven't done all cash yet, but we're starting to look at more and more deals with through an all cash lens.
Okay. When you were leveraged, what percentage leverage were you?
We typically go in at 75 or 70.
Okay.
In the last year or so, we've been underwriting deals more to, 65 all the way down to
65.
50.
Yeah.
And that's partially being driven by, by the
The
banks
interest
and the
rates.
agencies. Yeah,
Yeah. 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 Because they're looking at the debt service coverage ratio and all that other fun stuff.
exactly.
You have to qualify. And then do you look for like value add type
Yeah.
properties?
Yep. We are
Okay.
traditional value add investors. So whether that's physical and financial or a combination thereof, rents are under market, expenses are running out of control. Or we do look at more physically distressed properties, perhaps more heavy deferred maintenance. They might have more units that are down through, you know, um, physical vacancy. And so we're always willing to take a look at those assets too. In our current market, we're trying to shy away a little bit right now from really heavy value add projects. We don't want to be in a situation where, our investor returns are dependent solely on deploying, millions of dollars into the asset, hoping for a big upside on the other end. Because even though there really is a light, I think at the end of the tunnel that we're starting to see now, right? Inflation is trending downward a little bit. There's still a lot in the macro environment that resembles some of the pressures that were around in the late 70s, right? And I know I'm a
Yeah,
younger guy,
absolutely.
but I study economic cycles. There's a very there's how likely is it? I don't know, but there is a probability that inflation could go back, right? And some things
Yeah,
could become unfavorable. So we're looking
sure.
for assets with a lighter value add right now.
Yeah, and that stagflation could really be a major factor on that.
Yeah.
But yeah, when we come back, I'd like to ask you, like how big is your firm? How long it's been around? Any good? We always like to hear the horror stories and the good stories. Okay. All right.
Yeah, we
Here's
got
our
'em.
trivia question number 2 on basketball here, NBA. Who is the first NBA player to be named Player of the Year in 2 different states? So I'll tell you, obviously, he played for 2 different teams. Call 888-912-1190. First caller with correct answer wins that tanning certificate. Again, it's worth over $100. I want to make a mention here also for the Transcendence Theater. Check out their performances. I've been there before. Awesome. Bestnighthever.org is their website. So again, the trivia question is, who is the first NBA player to be named Player of the Year in 2 different states? Stay with us. You're listening to the Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with my special guest, Kris Morin. And our second trivia question on the NBA: who is the first NBA player to be named Player of the Year in 2 different states? Any
LeBron
idea?
James.
No, that would have been a good guess. Kevin Garnett played
Oh
for the
yeah.
Timberwolves and the Celtics. Yep. All right.
Timberwolves. Yeah.
So, Kris from Three Peaks Capital, how long have you guys been around?
So Three Peaks Capital is a newer entity. It's only
Okay.
been around for about 3 years when we decided to go pursue business out in the Midwest markets. I've been investing in real estate for since 2009. So, really going
Yeah.
on 14, 15 years now.
Okay.
The team that is at the leadership table, we've collectively acquired and managed a little over 10,000 doors.
Okay.
So I always like to say, Three Peaks resume is short, but the leadership team is not.
Yeah. Very good.
So at this point, we're a boutique firm. We're moving at a clip of about 13 to 15 million in acquisitions per year. That's mostly
Okay.
because we're working in Midwest markets where the cost per door is lower.
Yeah.
We're moving
That's still
into
pretty good,
Seattle.
though. I mean, how much you have under management?
We did about 200 units in the last 2 years. It's just
Uh,
it's been slow.
so
Oh, so we're
in dollar amounts?
yeah, we're probably it's probably about 16 million at this point.
It's not bad for three
Yep,
years.
yep.
I mean, because how do people know about you? Friends, family, and then you got to. Now, if it's only been around 3 years, I'm guessing that you haven't really turned over too many properties.
Not within that entity, but I've gone full cycle on a lot of deals.
Okay.
My personal portfolio, I've done probably about 50 million there.
Oh, okay. Well, good for you. Okay, yeah, that's pretty good since 2009. I like that. So walk us through the process of acquiring, managing, and high performing multifamily and apartment complexes, please.
Yeah, I think well from the from the lens of the listener, really at the end of the day, the way to think about it is our team. We identify the markets, we
Okay.
identify the deal, we do all the due diligence, we acquire the property, we manage it, we really handle the end to end cycle, and you know where passive investors or potential investors get involved is really upfront in the acquisition side. So when we're sourcing the equity, the same way when you're buying a house, you got to put 25, 30, 35% down, whatever it
Yeah.
might be. We're sourcing that capital from private individuals, retail investors as they're called in the marketplace. And so they're getting
And
involved upfront in the acquisition.
and if someone invests with you, what can they generally expect? Obviously, no promises. Do they get cash flow from day one?
Yeah. So we typically do buy into situations where we're cash flow positive from day one. So we have always successfully done distributions in our first quarter. We've not had to withhold distributions at all, even when times got tough.
Okay.
So you get your quarterly distributions, and it's a typical 70-30 equity split, 70% of the equity going to
Okay.
investors. We usually will do a 7 or an 8 pref up front, and that's the typical structure.
Is the investor getting, if they put 100 grand in, are they getting 8,000 a year in distributions?
Not in year one. So
Not
typically
in year
through
one.
the
Yeah. Okay.
stabilization. Yep. So we might only hit 5% in year one because we're
Okay.
getting rents up, right? We're getting it
Sure.
stabilized. But in year two, it might jump to 9%. And whatever is not met in year one, that balance accrues and rolls over into year two. So we
Okay.
we, we essentially have a catch up. Yep.
And are you staying in the Midwest market? Is that primarily where you're at?
So we like the Midwest for a number of reasons, and I'm talking very specifically about the state of Indiana.
Oh,
At the end of the day, there's a lot of tailwinds there. I think the outlook is strong both in the near term and the long term. Indiana is one of the few states in the U.S. right now that is actually experiencing positive rent growth. That's something that we had projected 2 years ago, and it's coming through to fruition. So our projects are performing quite well, and our investors are happy
good.
with it. This year, we're gonna be expanding into the Pacific Northwest, into the broader Seattle MSA, which we're really
Wow.
excited about. Yeah.
What makes you think that that's a good place to be?
At the end of the day, well, there's a couple of things. You know, we're looking to hedge our portfolio, right? We've got a lot of C-class value add investments across Indiana. Um, While the outlook there is strong, when you think of the major growth markets of the United States, the Bostons, the Dallas, the Phoenix, Seattle is one of them that emerges. Um, they're not only economically viable, but when it comes to just long-term dependability and growth, you can't beat a lot of these markets that are underpinned by, biotechnology, financial services,
Yeah.
technology in the case of Seattle. um, you know, and Seattle has really already gone through this sort of supply cycle that is happening now in markets like Dallas and Austin that are putting, downward pressures on rent premiums and really kind of jeopardizing the values. And um, you know, Seattle for a lot of reasons, it's the kind of market that you want to jump back into. Right now is a great time to invest. Now they're at a lack of supply and the growth is continuing.
Well, interesting
It's
because
just a
it's
great
like
market.
I don't know. You think of with all the summer of love they call it in 2020 and the BLM riots and all that kind of stuff that you think that people are moving out of Washington, like California and that sort of thing. But
Yeah.
apparently you're still saying that there's growth there.
Tremendous growth. Yep. And particularly in 2022, Seattle's growth outpaced Fort Worth. But, at the time, Fort Worth's all you heard about in the headlines. But, in a
Yeah.
lot of ways, it's because Seattle's just old news, right? I think people
Yeah.
expect that
Yeah.
from Seattle.
Yeah, but no, I agree. I mean, Microsoft is in what Kirkland,
Yeah.
and that's probably close. And yeah, it's. I think a lot of it depends on how business friendly they are. And I don't think Washington. I don't see them as business friendly. I think of Texas and maybe Georgia and Tennessee, but that's pretty good. But that's the thing is you're also, you're in the multifamily space, so you're not in the commercial area. Okay, we're gonna go to our third trivia question here. Which NBA player average this is kind of a weird, interesting question. Which player averaged more minutes per game than there are minutes in a game in that 1 year? Isn't that amazing? Call 888-1912-1190. First caller with correct answer wins that tanning certificate. Which NBA player averaged more minutes per game than there are minutes in a game in that 1 year? All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing. One more time, Edward Brown, along with Kris Morin. Our third trivia question on the NBA. Which player averaged more minutes per game than there are minutes in a game that 1 year?
Kobe Bryant.
No, Will Chamberlain.
Yeah.
Yeah, I mean, isn't that crazy? Must have been a lot of overtime.
Yeah.
That's all I can say. Okay, so what are some common misconceptions about real estate investing, and how do you address them?
Yeah, good question. So first of all, I think a lot of people who are unfamiliar to the space, they hear about real estate private equity and they just assume that's not for me. That's reserved for the financial elite. That's a Wall Street thing.
Hmm.
It's not true, right? And I think a lot of folks don't realize that the door is quite wide, and a lot of people really are eligible. And there are some eligibility requirements, but I always like to make it clear to folks, like, this really is available to you. This world of real estate private equity. I think a lot of people also think about it and they just assume it's high risk. And I think part of that is just a knee jerk reaction to not understanding it, right? I think we tend to be afraid of something we don't necessarily understand. One of the things I always like to highlight is, if you were to search an organization referred to as Tiger 21, there are ultra high net worth members from the United States that are part of this organization where the requirements are pretty steep. You actually have to have $20 million in liquidity at any given time, or they can essentially kick you out. And they do a yearly publication of their portfolio allocation for these individuals on a yearly basis. And if you compare the average investment portfolio of an everyday business professional to one of these Tiger 21 members, you see essentially that the average investor has 100% of their earnings invested into the stock market. And it's your traditional 60-40 split, 60% stocks, 40% bonds. If you look at the portfolio makeup of the America's ultra wealthy, you see 60% of their liquidity
Real
is
estate.
in private equity and real
Yeah,
estate.
real
Yep.
estate, yeah.
And the remaining 30% is in other forms of alternatives. Or I'm sorry, a large percentage of it. I think 19% is actually in the stock market. So it's a fundamental shift. And so I always say, like, if you want to be a millionaire, invest like a millionaire, and the
Yeah.
breadcrumbs are there. All you got to do is pick them up. And so real estate really is not risky. It's very much untethered from the larger macro environment.
Well, I've
And
always said this: everybody needs a place to live.
yeah,
You
that's
know,
right.
I'm kind of curious about the ultra wealthy. Do you have to like show them a balance sheet or something, or a Schwab
Yeah.
account statement?
Yep.
That's Tiger 21. I like that. Before I forget too, because we want to give out your information. How do people get a hold of you if they want to check you guys out?
Yeah, well, I'm a big social media buff, so if anybody wants to find me, Kris Morin, on LinkedIn or Facebook, I'm very responsive. They can go to www.threepeakscap.com. It's spelled out threepeakscap.com. Very responsive there. They can submit and join our investor community. We have loads of free downloads, books, investor 101 courses. Folks can gain access to all of that and really start to explore this real estate private equity space.
Very cool. So, how do you assess the risk and potential returns of family real estate investments for your clients? How
Yeah,
do you assess the risk?
we have a very thorough due diligence process, which actually we have that available as a free download on our website. Folks can check that out. It's the due diligence checklist in the resources section. But
Okay.
I'll actually, rather than drain that, I'll talk about how we're different. I think one of the things that we bring to the table that other folks don't have, our peers in the industry, is expertise in business strategy and law and real
Yeah.
estate. You know when we A lot of folks think, and when I say folks, my peers in the industry will typically say, "Oh, population growth, job growth. That's what makes a great market." And if that were true, Dallas wouldn't be experiencing a boatload of challenges right now, right? And so supply is the great equalizer.
Yeah.
So when I'm evaluating a market, I'm looking at construction units under construction permits. I'm calling chambers of commerce. I'm calling
Well,
business development offices to really get the download of what's going on. I don't just look at the employers in the area. I pull their earnings records. I listen to their earnings calls to get a sense
Wow.
for, is their leadership team, are they looking to do layoffs? What kinds of pressures are they feeling within their internal supply chains? I really try to, capture the vast sort of macroeconomic environment, not only around that particular market, but broadly across the U.S., and try to understand all of the risks and the impacts that isn't immediately visible to the human eye. And I think that just allows us to understand the risk and shape our deals in new ways that allow us to sort of, it creates a
No,
lower risk
that's
profile.
impressive due diligence because I could see where, like, if big company, big employer is going to be going out of business, they're probably going to have a lot more supply of housing units.
Yeah.
And let's see here, we've got another quick minute before we have to go to our break. What advice do you have for professionals looking to break free from the corporate grind and pursue alternative paths to financial independence?
Just to start getting educated. I think folks are overwhelmed because they don't know where to start. But I think just start getting educated on private equity, on alternatives, on real estate. Like I say, go to our website, download all the free information. I think and make an investment. Test it out. I think you'll be glad you did.
Okay. And when we come back from our break, I do want to ask about how you see the future, the landscape. I do want to make a mention here also. So, our Pacific Southwest Note Fund, we just pay, we're boring. We just pay a flat 8.5%. And because it's part of the QBID rules, for those who qualify, you don't have to pay taxes on 100% of the income. You only have to pay taxes on 80%. But we're extremely conservative because our average loan to value in the fund is, I think, 54%, but we're buying the loans at discounts. So our average investment to value is 37%. And I'd be very surprised if anybody can tell me any fund that's more conservative than that. We're unleveraged. And now the thing is, we don't have the big growth like potentially Chris has got. We're just a little old ladies, just collecting our interest. All right. If for more information, go to pacificprivatemoney.com. Stay with us. The best of investing. Will be right back with some closing comments and some thoughts for the day. Don't touch that dial. Welcome back to the best of investing. Last time for today, I'm Edward Brown, your host, along with Kris Morin of Three Peaks Capital. Now, we didn't have a trivia question, so we're going to get right into our last question for our guest. How do you see the landscape of real estate investing evolving in the coming years, and what opportunities do you foresee for investors?
Yeah, so I'll speak specifically to multifamily. I think that's actually where the opportunity is really the strongest. At the end of the day, we're a nation of renters, and that's just
Yeah.
continuing to grow, right? So if you look at heads of households, so data in terms of who's living and paying the bills in a household, traditionally you see about 35-36% of Americans are renters, and right now census data is showing that's already shifting to closer to 45%, and I think that number is going to continue to trend upward. So the demand is there. And then on a supply side, depending on the studies you're looking at, the general, the narrative that's carrying across right now, it's a study published by the National Multifamily Housing Council suggests that we're about 4.5 million units shy of demand in the United States today. So when you think about the supply's not there, the demand's only getting stronger. That creates a basis, right, for continued rent growth. And when the rents are growing, our profits improving, and the value of the assets themselves are improving. So, the outlook is quite strong. That's a problem that's not going to be solved in the foreseeable future. So
Yeah.
there's really never been a better time in American history.
Yeah, and I've said this before on the show, so the listeners know this. Whether no matter what side of the political aisle you're on, the fact that we've had millions of people come into the country, they're not all going to stay in New York at the Rockefeller Hotel or Roosevelt Hotel, and so maybe on the lower end, the renters will go there to start with, but then that'll what do they say? A rising tide lifts all boats.
That's right.
You know, and again, everybody needs a place to live. My wife will not let me live in a tent, no matter how much I want to live in a tent. So we may have to downsize, but we won't be. Hopefully, won't be homeless any day. Why don't you give out your information again in case people want to get in touch with you?
Yeah, sure. So you can find me, Kris Morin, on Facebook or LinkedIn. Website's www.3peakscap, short for capital. It's cap.com. You can join our investor community list there, and from there you'll have my email. You can send in your questions, but I'm responsive through all of those channels, so I'm happy to connect with anyone.
All right, very good. And again, for people who are interested in getting in touch with Pacific Private Money, go to pacificprivatemoney.com and check out the funds that they have. There's the Southwest Fund that I manage, but then they also have the Freedom Fund, which pays anywhere from 7 to 10%, depending upon how much you put in. And again, it's all we're just lenders, so it's all backed by the real estate, unlevered. Actually, they might have a little bit of leverage in the Freedom Fund, but it's not much. It's usually just temporary. All right. You ready for our thoughts of the day? So last week, somebody asked me about the vodka diet I was on and what did I lose? And I said, so far about 2 days worth. And, and so when I couldn't attend my dad's funeral, I told my brother to do something nice for my dad and send me the bill. Later, I got a bill for $200, so I paid it. The next month, I got another bill for $200, and I paid it thinking that there were some incidental expenses. After a few more of these $200 bills that kept arriving, I asked my brother what was going on. And he said, well, you said to do something nice for dad, so I rented him a tuxedo. And with that, we are going to say we're going to do our adieus. Again, give out your information one more time before we leave.
Sure. Kris Morin, that's Kris with a K. www.threepeakscap.com. You can email me. It's Kris@threepeakscap.com. Again, that's Kris with a K. I'm very responsive. Happy to answer any questions you have.
Great. All right, audience, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.
Thanks, Ed.